How much money do you actually need to invest to get 500 euros, 1,000 euros, or even 10,000 euros a month in passive income? That's the big question, right? Earning money without actively working for it. Today, we're going to crunch the numbers. We'll look at real-world data from 2018 to 2024 to figure out exactly how much capital you need in 2025 to generate serious passive income from ETF dividends. We'll compare a classic global ETF against 3 popular dividend-focused ETFs. We'll also uncover the pros and cons of each strategy and bust some common myths about passive income that many investors fall for. But before we dive in, remember, to build passive income, you need the right ETF and the right brokerage account. Some brokers even let you automatically reinvest your dividends, which is a powerful tool for growing your wealth over time. So, how did we calculate all this? Our analysis looks at for specific ETFs from the end of 2018 to the end of 2020 for a full 6 years. We're using a standard distributing global ETF, the iShares MSCI World, and 3 popular dividend ETFs, the iShares MSCI World Quality Dividend, the Vanguard FTSE All World High Dividend Yield, and the VanEck Morningstar Developed Markets Dividend Leaders, all the dividend numbers we'll discuss are gross, meaning before tax, and we're not just looking at the payouts, we're also tracking the final portfolio value. Because, as you'll see, high payouts often mean slower growth. Let's start small with a 10,000 euros investment. If you had put this into the standard global ETF, you would have received an average annual payout of about 204 euros. That's around 51 euros per quarter. Now, let's look at the dividend ETFs. The quality dividend ETF would have paid out an average of 370 euros a year, or about 31 euros a month. Your portfolio would have grown to around 15,700 euros. The Vanguard High Dividend Yield ETF paid out even more, at 413 euros a year. But the portfolio value was slightly lower at 14,700 euros. The strongest payout came from the VanEck Dividend Leaders ETF, giving you an average of 560 euros per year, or 47 euros a month, with a final portfolio value of nearly 16,000 euros. So, what does this tell us? Dividend ETFs give you more cash in hand today, but it comes at the cost of lower overall portfolio growth. The global ETF still wins when it comes to total value. Okay, let's increase the stakes. What happens with a 50,000 euros investment? Scaling up the numbers, the global ETF would give you about 85 euros a month. The dividend ETFs would pay significantly more, ranging from 150 euros with the quality dividend ETF up to 237 euros per month with the VanEck Dividend Leaders. Now, the payouts are becoming more noticeable, maybe enough to cover a small bill or a streaming subscription. But let's be honest, it's still not life-changing money. This is where it gets interesting. Let's look at a 250,000 euros investment. With the global ETF, your annual payout would be just over 5,000 euros, or 424 euros a month. Now for the million-euro question. If you invested 1 million euros, the global ETF would provide about 1,700 euros a month in gross dividends, and your portfolio would be worth over 2.1 million euros. The dividend ETFs, on the other hand, would generate between 3,000 euros and 4,700 euros a month. We're now in a range that could potentially replace a modest salary. But remember, these are pre-tax numbers. Payouts can fluctuate, and you'd still need to cover your own taxes and health insurance. Finally, let's imagine the luxury scenario, a 3 million euros investment. At this level, the global ETF would generate over 5,000 euros a month. But the dividend ETFs, they would bring in a massive 9,000 euros to 14,000 euros a month. With this kind of capital, you could comfortably live off your dividends alone. Of course, this is a long-term goal for most, not a starting point. It just puts into perspective the scale of capital realistically needed to achieve true financial independence through passive income. So, this all sounds great, but there's a hidden truth behind dividends that you need to understand. First, dividends are not free money. When a company pays a dividend, its share price drops by roughly the same amount. You're not getting extra value, you're just turning a piece of your investment into cash. Second, you can create the exact same effect with a reinvesting or accumulating ETF. You can simply sell a small portion of your holdings whenever you need cash. This is like creating your own self-made dividend. With modern low-cost brokers, this is easy and the tax implications are often very similar. What truly matters is the total return of your investment, the capital gains plus dividends, not how you receive it. Third, dividends are not guaranteed. They fluctuate with the economy. Companies can cut or suspend them, as many did during the 2020 crisis. Relying on dividends for fixed expenses like rent can be risky. It's much safer to use them for variable costs like travel or hobbies. And finally, don't forget taxes. All the numbers we've discussed are gross. Depending on where you live, you'll have to pay taxes on these dividends once you exceed your tax-free allowance. So, let's get down to it. What do you actually need to achieve your passive income goals? Based on our analysis, for €500 a month, you'll likely need between €150,000 and €300,000 invested. So, what are the key takeaways? First, higher dividends usually mean low or long-term growth. Second, total return is what really matters, not whether your gains come from dividends or price appreciation. And third, accumulating ETFs combined with a withdrawal plan can achieve the same result as a dividend strategy. Dividend ETFs can be incredibly motivating. Seeing that cash hit your account feels great. But don't let that feeling distract you from the bigger picture. Long-term investing success comes from total growth, smart diversification, and discipline. Use dividend income to complement your journey to financial freedom, not as your only safety net. I hope this video was helpful and gave you a clear, data-driven look at what it takes to build passive income. If it did, please give us a thumbs up and subscribe to our channel. We regularly post new videos and tutorials on investing to make the world of finance more understandable for you. Thanks for watching, and see you in the next video.